record the second part. Yes, because I don't prefer my videos to be too long. Can you see now? Because sometimes you can be lost along the way. Now, so the first section, like I said, for cash flow is cash flow from operating activities. Now, when the business operates, it means it's when we sell, we buy. We sell, we buy. It means we are operating.
Okay.
Are we together? Like, I don't know your company, what are you doing at your company, but you know, at your company, you know what is the main aim of your company. So I think maybe you are selling or you're offering a service. Can you see now? In those, like me as a lecturer, when I lecture during the day, it means I'm operating. Can you see now?
Okay.
So operations are what is going to give us money. So for us to make profit, it means we have been operating.
Okay.
Operating is like performing what the business is aiming to do. Like I said, if you are having a tech shop, what do you do in a tech shop? You sell.
That's true.
It means you are operating. So that's why when you see the word operating, you must think about the statement of profit and loss.
Loss.
So we're gonna focus on the statement of profit operating. Is where we're gonna find incomes and expenses. Remember, we spoke about that.
Yes.
Yes. So in other words, so here we are going to follow the statement of profit and loss. But unfortunately, there is pattern that we need to follow, of which you must learn, because I don't know, do they allow you to use what we call the open book? Do they use open book? Do they allow you to use some of their standards? They don't allow you, ne?
No, they don't.
So it means we need to make sure that we know the format. But I don't want you to memorize it. I just want you to know how to use it, because the way, if you use it on a regular basis, you will get used to it. Okay.
Yep.
So the first thing that you need to have under this section, we need to have what you call cash received from customers. And it makes sense. We're operating. We receive cash from what? From the
customers.
Can you see now? That's the first thing. But for us to know the cash from customers, unfortunately, there is a calculation for this. So we need to have calculation. Remember, even from the requirements, they said we must show calculations.
Yes.
So I'm going to call this calculation number one. Can you say I call it C1?
Okay.
It doesn't matter how you call it. You can call it one, but for me, I'm just calling it C1, meaning calculation number one. So meaning down there, I'm going to have some calculation at the bottom. Maybe I can just call it what? C1 like that. That will be my calculation, the first one.
Okay.
Are we together? Are we still together?
Still together.
Okay, no problem. I'm going to do this just to make it simple. So we're trying to find the amount that we're going to put here. At the moment, I'm going to be very slow. So on this calculation, I can just, can you see now? I can just put it like that. This is calculation number
one.
Yes. Let me just do it like this so that you can just understand. Understand? So now, according to this, for us to be able to understand this section, so obviously cash is received from customers. Customers are the same as our debtors. You know debtors, ne?
Yes.
Yeah, debtors are people who owe us, ne?
Correct.
Yes. Now, firstly, we need to go and find what? And find our debtors first. But sometimes they don't call debtors debtors. They call them trade and other receivables. You can, on your side, you can write it down then. Okay, let me write it down here. It's the same as what?
Debtors.
Debt control. But remember, according to our standards, I'm referring to the IFRS, they prefer to call them what? Trade and other
Trade and other
receivables.
receivables.
It means this is the same as debtors control.
Okay.
So these are the people who owe us. So firstly, we need to find the balance at the beginning. So let me just call it opening balance. So we need to go and find the opening balance.
Balance.
Or you can call it balance at the beginning. It's up to you. Ne?
Yeah.
Remember, we're trying to calculate this cash receipt from customers. So what we need to do, we need to go back to the information. Because this is an asset, you will find it somewhere here. Don't you see that trade other receivables? Can you see this one?
Yes, I see it.
It's the same as debtors. Are we together?
Together.
So if you can check, the books which you are dealing with are for the year ended what? Of what?
30
Can you see now?
Yes, I see.
So this means our current year is 2023.
Yes.
Does that make sense? So this means, okay, I agree. Okay, I'm gonna ask you this question. Am I correct if I say the closing balance for 2022 is the opening balance for 2023? Do you agree with me?
That's correct. Yes, I do.
So it means this amount of 887,500 was the opening balance for 2023 because it was the closing balance for 2022.
That's correct.
So I'm gonna put it as my opening balance. I'm gonna go there.
Okay.
I'm gonna go there. The calculation there. Oh, let me do this. That thing disappeared. I don't know what happened. So I'm just gonna call it opening balance. And then I'm just gonna amount this 887. Please tell me that you understand what I just did.
Yes, I do understand it.
Okay, no problem. Remember, we are trying to get cash from what? From the customers.
Yes.
Now, I want to make it practical. If we started with, in other words, at the beginning of the year, the customers were owing us this amount, okay?
Yes.
So during the period, we sell to customers. That's why we're in business.
Yes.
So if they owe me 887 and I sell to them, it means I must go and check my sales if I sold during the period or not. So I must check if I sold to my debtor. So I'm gonna go up there and check if I made any sales. Do you see any sales there?
Yeah. It's a local
How much
revenue.
revenue? Ne?
Yes.
Now, remember, these are the sales, in other words, we sold to the customers. Remember, at the end of the day, we want to calculate how much cash did we receive from customers. Ne?
Yes.
But at the moment, these sales, we don't know whether it's cash or not.
That's
Are we
true.
together?
Yes.
So we are going to find the cash at the end of the day. So what I'm gonna do, I'm gonna go and put to the calculation there. I'm gonna go there and add my sales. Let me just say add or plus sales. So those sales, remember, I'm selling to the customers. I'm gonna put that sale there. I'm gonna add it. Usually, this thing makes sense if you open what you call the general ledger account. But don't worry, at a later stage, I'll show you how to do that. But at the moment, let's try to check this formula. Okay. So far, you must find the deficit at the beginning. You must go and find sales, you add them. Any questions so
Okay.
far?
No, we're good so far.
It's good so far. So here we need anything related to what? To the debtors. Okay?
Yes.
Now, after that, we need to check. Do we have, there's something called allowances for credit losses. Ne?
Okay.
But I'm going to explain what is allowances for credit losses. For example, ne, do you know that in business, when you sell, why do many companies don't prefer to sell goods on credit? What are they afraid of? Like
Um,
you, like you are selling your stuff, but you don't want to sell on credit. You are afraid of something.
bad debt.
I like that. Remember, the other term for bad debt is called credit losses.
Okay.
So credit losses is the same as bad debts. Ne?
All right.
Now, because if you are a business and you are selling on credit, obviously you know that if you've got bad debts will affect your business negatively.
Yes.
Are we together?
We're together.
That's why sometimes we need to put money aside and say, should I have bad debts? I'm gonna use this money so that I can continue running the business. Does that make sense?
Yes, it does.
So we call that allowances for credit losses.
Okay.
The money that you put aside and say, should I have bad debts? I'm gonna use that money because bad debts affect. What if, let's say, people don't pay? Now I close my business because of bad debts. So I want to avoid that situation. I put money aside, even though I can run after those people. At least my business will continue to run.
Okay.
So allowances for credit losses is the money that you put aside for bad debts. So it affects this calculation. It affects debtors because bad debts is when I write off my debtors. Are we together?
Yes.
So you must also go and look for what you call the allowances for what? For allowances. So sometimes they call it provision for bad debts. It's the same thing. Maybe you have seen this before. Provision
Yes,
for
I
bad
have.
debts.
Mm.
Yes, it's the same thing. So we have to go and check for that, but we just have to check the effect. So let's go and check that provision that I'm talking about. I'm going to come back to this one.
Okay.
I'm going to go up there and check for any allowances for credit losses. So when I check here, sometimes they call it provision. I don't see it here. If you don't see it here, it's not even this one. Eh? Here they just said provision. I'm looking for allowances. So if you don't find it here, you don't have to stop. You just go and try to check. Maybe you can find it somewhere. Can you see now?
Maybe on additional information.
That's true. So here I don't see anything called allowances for credit losses. Here I don't see anything. But number 3. Can you see number 3 here?
Yeah, yeah.
This one.
Allowance for credit loss. Yeah.
This is what is going to affect us.
Okay.
But we need to understand here. Uh, let me ask you something. let's say you take money, you put it aside for allowances for credit losses.
Yes.
You you take it from your bank and you put it aside. Do you think that is a good thing for you to provide for, like to take money from the business for credit losses? Do you think it's a good thing for the business? Okay, I know it's a good thing, but what is the impact? Do you think that the impact is positive or negative in a way?
Negative.
Negative. So it means if you keep on increasing your allowances for credit losses, it means you keep taking money from your business for those bad debts. Can you see now?
Yes.
So meaning the increase will have a negative impact on your debtors.
That's true.
And a decrease, it means if you decrease it, it means you are getting it back to the business. It's going to have a positive impact.
That's true.
I want you to look at number 3. Can you see they gave you 2022 as 32,750? Can you see this amount here?
Yes, I see it.
17,600. It means it's for the
600.
2023. Are you with me?
Yes. Yes.
Is this an increase or decrease from last year?
Between 2022 and 2023.
Yes, between these two amounts. Remember, this one, 17 is 2023, this is 2022. From 2022 to 2023, is it an increase or decrease if you look at the amount?
It's a decrease.
It's a decrease.
Mm.
A decrease, what do you think it will have as an impact? Is it going to have a positive impact or a negative impact?
This is a positive impact,
Remember,
I think.
when we take money, we provide for the bad debt. It's not a good thing because we are taking money that belongs to the business for credit losses. So if it decreases, it means we are getting money back, the one that we provided for. In other words, it's like the business is getting its money back. So a
Okay.
decrease has got a positive impact because we are getting our money back to the business.
Okay.
It's not that money is not exposed anymore to the credit losses. Because remember,
Yes.
if if we are having it there, if we have credit losses, it means we're gonna use that money.
Mm.
So what I want you to note, anything, any increase is a it's not a good thing because we are taking money out of the business in a way.
Out of the business. Okay.
So just know this so that in future I'm still gonna ask you this type of a question. But as long as you say you understand now, I'm okay for now.
Yes, we're good.
Okay. Now I'm gonna go back to my note for my calculation. I'm here. I'm just gonna say we agree that it's a decrease
Yes.
in allowances for credit losses. So we can just put it in brackets. This question paper is the 2023 one. I don't know if you have it from, or do you want me to email you this question? Or you
No,
are you
no.
coping for
Got it.
now?
I am. I'm okay.
Okay, no problem. Okay. So the amount that we have, the difference gonna be 32750, because we want the difference. It's a decrease, remember?
Yes. Minus 17,000.
So the what is the difference? Three two seven fifty minus 17,600. I get 15,150. Can I put brackets or can I leave it like this? Can I put brackets?
Let's see.
Remember, we ask a question and say, is it having a positive impact or a negative impact? Is it a good thing or a bad thing now?
I think you can leave it like that.
Because it is a good thing because we got the money back.
We got the money back, yes.
So the reason I'm doing that is because someone will see the word decrease here and
Decrease
say we
and think
must
that
increase.
okay, no, I get you.
Yes. So the decrease here is a good thing. Next time, if it is an increase, you're gonna put brackets. Don't forget.
Okay,
Yes.
because it'll be a minus. I understand.
That's true. Are you good?
I'm good.
No problem. Now, next time you can have something called credit losses. I think you know credit losses are the same as bad debts, né?
Yes.
If you have bad debts, obviously bad debts is like you are writing off a debtor. You were supposed to put it and less it because bad debts, if I write off a debtor, it means debtors are less now. Does that make sense?
Yes, it does.
So if you have got bad debts, you are supposed to put them here in brackets.
That's true.
But bad debts won't have, remember, bad debt is the same as what? As credit losses, né?
Credit losses, yes.
They don't have the previous year and the current year. They only have the current year. So you won't find them like this.
Yeah, they won't have anything. It'll just be a straight amount.
Yes. Unlike this one, because we provide every year. We check this year, next year we check, we put the new amount. Sometimes we increase, sometimes we decrease. Can you see now?
Okay.
Yes. Can we take it a bit further?
Yes, we can.
And now is then that we can less. Can you see this one here? I'm gonna just do it like this. Now we are going to less trade and other receivables, but this one must be at the end. I'm gonna call it closing balance. It's just the opposite of what we have. Can you see this one was on top here? It was the opening.
That was the opening, yeah.
So where we found opening, let's go and check the closing. I'm gonna
Closing.
up there.
Yeah.
Remember? Up there.
That's over 2023.
So we are here. Which one do you think is closing? 2023, ne?
Yes. 507.
507. Yeah, five. This one. 100. We put it in brackets. Can you see?
Yes, I see.
So now when you solve this with a calculator, you take this plus this plus this minus this. How much?
887,500. There's 1250. Calculating something like that. 87.
I find 1,645,550. Double check is what I found. Maybe
Let me
this is the
just
total. Double check me.
Yes, it is.
Yes.
What is
So this is the cash that we have been looking for.
okay?
That is the cash from what? Our debtors.
Okay.
This is the cash from our customers, okay? This one. Are we still together?
We are together.
Yes. So now we can take this amount. This one is the one to come. Let me copy the right one. It's this one. Please talk to me. Because
I'm
I
still
want to master one thing at a time.
We're still good. I
I can hear you.
understand. I
You
still
understand me?
understand. We're still together, yeah.
That's great. That's great. This was the first calculation.
Calculation, okay.